Happy Labor Day weekend, everybody. Today I will go over the technical and some fundamental analysis about a potential buying opportunity of an undervalued and underappreciated COVID sweetheart that we all know, the company called Zoom Video Communications. The ticker is ZM. Some say this company has seen its best days, but I beg to differ. If the stock returns to its all-time highs reached just about a year ago, we're looking at possible 800% return coming up. Before we get started, if you're interested in real estate investing, then make sure to check out and open a new account with Fundrise, which is one of my favorite real estate investing platforms out there. For limited time only, if you open a new account using my referral link in the description below and deposits just $10, you will get a $50 bonus added to your account absolutely free, no strings attached. Now let's get started. First thing I want to do is quickly explain what Zoom is and do a very brief fundamental analysis on it. Zoom is a cloud-based video conferencing tool that lets you host virtual one-on-one or team meetings very easily. Zoom is available free of charge to anyone, and the basic version offers all the facilities that most people will need. However, there are subscription tiers out there which have been very successful and very profitable for the company. Zoom Video Communications is a pandemic stock that saw stock prices rise and fall spectacularly in the past 3 years. The highest price per share was recorded at a staggering $600 and the lowest at just $60. Zoom is now trading below the pre-pandemic prices we'll see in the technical analysis in just a minute. Using March 1st, 2020 as a reference date, which is usually considered to be the date when the pandemic officially started, Zoom is currently trading down about 18% from that point. When you use the all-time high prices reached during the pandemic, the stock is trading down at least 85%. Those numbers are very discouraging, down 85% from the all-time highs from just a year ago. But there are a few important things to remember. One of them is that Zoom became a publicly traded company before the COVID-19 pandemic actually began. It went public in April of 2019, almost a year before the beginning of the pandemic. Which means it's not just some company that launched an IPO shortly after COVID-19 started in order to benefit from the stay-at-home hype. Another thing to remember is that Zoom is actually a profitable company and has grown their operations tremendously since 2019 and have captured hundreds of thousands of long-term customers that are loyal and are sticking with the company. So let's quickly look at the income statement here. This is the income statement, and pretty much the most important thing here is the gross profit. And as you can see, from 2019 all the way to 2022, the gross profit has been increasing tremendously. Now let's move on to the balance sheet. And on the balance sheet, what we're really interested in is total assets, which have been increasing since 2019, as you can see here, and total equity, of course, which has also been increasing tremendously. Now, of course, the pandemic has accelerated these numbers. You could see that it literally jumped from 167 million to 3.8 billion in just 2 years. So the pandemic has definitely helped this company, the stock, reach its goals where it was gonna go much faster than it would have if there was no pandemic. And finally, the last thing we want to look at is the cash flow. We're gonna click here, and the most important thing on the cash flow statement is obviously the free cash flow. How much cash this company made and has in case something happens. 2019 we started off with just 20 million right here, and now we're at 1.2 1.27 billion. All right, and finally, let's get into the technical analysis with the potential of an 800 to maybe even 900% return. So first things, let me show you why I think we might be able to get these crazy returns sometime in the next 5 to 10 years. I do not think it will happen before then. However, you never know. If there's a black swan event like we had with COVID-19, a similar pump like we see over here may happen. However, let's take this ruler and see from all-time low of around $60 to the all-time high of around $600 is 887%. Now, we're probably not going to be aiming for this number. However, if this stock returns to the all-time highs, which it might, this is the potential return. Amazing. Amazing. You can literally 9x your money in just a few years. So that's the important thing. Now, guys, let me show you a few support and resistance lines. Now, again, like I mentioned before, Zoom went public in April of 2019, so pre-pandemic, as you could see right over here where I'm pointing to right now. And its IPO price was about $60 or $65. Now, as you could see, before the pandemic, Zoom has been trading sideways. It's been trading between $60 and $100. So what happened here? It IPO'd at 60, went all the way to 100, then it traded right around this $100 zone, and then went back to 60. What happens here? Well, I'm sure many of you know or heard of venture capitalists, right? These are firms or individuals with just pretty much unlimited amount of money, and what they do is they throw it at different tech startups a lot of the time. So this is what happened. This is what happens here. Now, these venture capitalists, they give money to these companies in order to expand and for research and development, among other things, in order so the company could survive and pay their employees so it doesn't go bankrupt and go out of business. In return, the company gives shares to these venture capitalists before the company goes public. So when Zoom was private, it raised capital with venture capitalists, and in return, the venture capitalists got shares of this company called Zoom. And obviously the end goal for these venture capitalists is to sell these shares when the company goes public at a crazy profit. Now, the trick here is that these people who give money or who gave money to Zoom, they probably got these shares at a super discounted prices. We're talking $20, $30, $10, anything in that area, right? So even when Zoom went public at IPO at a price of $60 or $65, they already made profit. However, there's a lot of clauses in the contracts that say that if you're an early investor, if you're a venture capitalist, you cannot sell your shares when the company goes public. You cannot sell them for a certain period of time. Usually it's around 3 months, 6 months, or probably a year. So this is what happened here. Zoom went public in April. And there was a lot of hype around it, right? It's a really cool tech company. It's innovative. And retail investors like me and you have bought this story up. So we've bought, and the company went, and the price of the stock went all the way to $100. Then it traded sideways for about a few months. Then likely the lockup date of these venture capitalists expired, and they decided to take their profit. And that is why we see the stock price go from about $100 back to $60 or $65 here. However, what we could see is that even with this selling off, this support line of around $60 held once, twice, 3 times, and almost over here 4 times. So even with the selling of these major venture capitalists, tremendous amount of shares were sold during that time. The stock in the company was still able to not go below its IPO price. So we could call this $60 a very, very, very strong multi-year, 3-year-old support line that hasn't been broken for over 3 years. So this is what you see, this red line here. This is a very, very strong support line that we're going to be aiming for as our entry point in this mid to long term trade. Now, Let me show you. Let me show you another line here. Is somewhere right here. This is somewhere mid-February, and this is where you could see the stock started pumping tremendously. I mean, like we literally went from 100 to 600 in pretty much less than a year, right? So this is where the official announcement that we're in the pandemic, the lockdown started happening. This is when it happened and the price went up. Now, this is a growth stock, so it's very, very hard to actually find certain support and resistance lines. Now, we found one support line that's $60 or $65, but in a resistance line that we had here at $100. But other than that, there's not much there. The all-time high is at 600, but other than that, the stock went up and then it went down, almost looking like a pump and dump, but of course it is not. Now, the important question to ask yourself, is this company better than it was in 2019? Because what I like to do with my trades and my investing, I literally like to cut out anything that has to do with the pandemic in these charts. So literally anything from pretty much this point here, what you're seeing right now, to probably where the pandemic officially ended, where they announced that you don't need to wear masks, vaccines are not mandatory to go anywhere, there's no more lockdowns, it's fairly recent, right? It's probably like closer to the spring of 2022. So it's somewhere here. So literally this whole big chunk here, I like to cut out like it never happened because it was a black swan event. It's unlikely to happen again. And if we cut out this big chunk over here that pumped 800% and went down, this stock could be considered a range-bound stock that literally bounces anywhere between $60 and $100. So this red line and this blue line. Right, so if we imagine that we cut out this part of the chart, let me get rid of it, and I'll draw. Imagine that let me just draw this. Imagine you cut out this part of the chart, right? So this is where the pandemic started, and this is where it ended. So this shaded blue portion, imagine you just cut it out, right? This is where the pandemic started, and this is where it ended, right? So if you bought up here, you're in trouble, but it is what it is. So as you can see, if we cut this part out, this stock is bouncing between $60 and $100. And as you can see, recently it went below $100 due to the good earnings, but that's not what Wall Street expected. And as you can see, this $100 line, there was previous resistance in 2019. It bounced off the 100, Now in 2022, it acted as a good support line. It bounced off $100, bounced off $100, bounced off $100. Now, the earnings were disappointing to Wall Street. They were still good earnings. They were still positive. The company did good. They made money in this environment. But obviously, Wall Street could never be satisfied. So that's why it sold off here on the earnings, I think maybe a couple of weeks ago. What's more important is that we're back in this range between $60 and $100, and those will be considered our entry points and our major exit points, right? So I never put in all the money all at the same time. So let's say I have $1,000 that I want to put into this trade, which what I will be doing. Now, today's price, as you can see, is around $80 right here, $79.35. So I will buy a few shares today. So let's say I buy 2 shares today, because you never know if the price will tank all the way to our entry point. So you always want a dollar cost average in. So in my opinion, anything below $80, right, is definitely a buy. You buy a few shares or 1 share, and then you see what happens for a week or 2. Right, so the first entry point is obviously somewhere around $80. You don't want to go too far above it. However, if it goes below it down to 60, that's our major entry point, because that is a very, very strong 3-year-old, almost unbroken support line. Okay, now a lot of the companies that go public as an IPO, as of now, they're trading below their their offering price. So it is likely, because the federal government, they're still raising these interest rates, there's still war in Ukraine, the environment, inflation, all these things are happening. So there is a good chance that Zoom over the next few months will dip below this $60 mark, and you will get an amazing entry point below the IPO price, and that is always important. So definitely I will be buying at $80 a few shares, and then I will be dollar cost averaging into this position, probably at 70, at 60, at 50, and if it goes below that, I will be buying below that as well. Our exit points, so again, same thing, we never sell all of our shares all at the same time. Our exit point for short term is obviously this $100 mark, this blue line here. Maybe I'll take off 50% of my position at that point, and the rest I will let it ride for many, many years. And why? Well, guys, this is not a bad company. This is a good company. This is a profitable company. It's not like I'm investing in some Rocket Labs. I don't know if you heard of that, like some fake space thing or some metaverse situation. You don't know what's gonna happen. This is a company that is making money, that has customers, and they have good business. 50% for short-term profit, always nice. However, the other 50%, I will let that ride. I will, if it ever reaches 600, that will be my major exit point. We could see some of these, dead cat bounces that we saw. We might take some at 450, at 400, all these kind of like these even numbers, so to speak, but nothing crazy. I will most likely let it ride for a couple of years and see where it goes. Even though I do not use many indicators, in this case here, I did put an RSI, over here, relative strength index, which shows that it is oversold, and it is a good buying opportunity at this point, as you can see here. So there's a couple of more indicators that I'd like to use and show you. They don't really show much in this case. Literally, the only thing we need to know is the support and resistance lines and this range that Zoom is currently trading at, right? So let me show you. There's a 50-day moving average. As you could see, the stock price goes above and below it all the time, so it's pretty much irrelevant. The 200-day moving average, the price of the stock is below the 200-day moving average. That means we're in the bear market, and it will likely keep selling off for the near future. Stop and reverse in this case doesn't do much. I'm not even going to put it. And another thing I like to use is the Bollinger Bands. I would have to zoom in on this here. So as you can see on the Bollinger Bands, this screams a buy. So the way the Bollinger Bands work is that you want to buy anytime the price or the wicks, they touch the lower Bollinger Band, and then you want to take some of your position off at the middle Bollinger Band and then at the top Bollinger Band, which coincidentally lines up with this range that I drew, which is short-term range for about 6 months. That is pretty much it, guys. I hope you enjoyed this video. Let me know if you like my technical analysis, if you've been looking at Zoom as a potential buy. Will it be a short, mid, or long-term investment for you? And do you think it will return to the all-time highs? Once again, thank you so much for watching. Don't forget to sign up with Fundrise using my referral link to get a $50 bonus free for a limited time only. Thank you so much for watching, and leave your comments down below. I can't wait to hear from you, and have a great Labor Day weekend. Take care. Cheers. Peace.